what you got under the tree or what you received or what you were given as a kid. A lot of time, you get things because you see big commercials. You think that's what your kid wants. And within a couple days, it's just laying under the tree again, or it's forgotten. And it just leads to like regret. You're like, oh man, you end up paying for that gift way after it's paid for, right? You're paying interest to somebody else. It's stressing you out. Now you're trying to find a way to provide, but you put yourself in debt. I mean, that's happened to me so many times as an adult, as a father.
Yeah. So how does infinite banking change that?
It's simple because now we're not just handing out the dollars without teaching our kids how to use them.
Ah,
Welcome back to another episode of WealthWise Banking. We're going to cover holiday gifting that lasts. But first, Jay Huggins, Jeremy Lee, how are you, brother?
I'm doing well, man. I'm doing well. It was good spending a week or so with you and your family down in Florida. I'm back home in Georgia, getting settled in, and we just had our first cold snap of the season. So, yeah, it's good.
I think you're sending that to us tomorrow. We're going to get 38 degrees down here. So it's a perfect time, right? How we can talk about gifts and how we can turn them into 100-year legacy. You know, Jeremy, I don't know about you, but when we're looking, I've had the boys Rochambeau to see who's going to get a Christmas gift. Most gifts fade after the wrapping paper is gone, right? This year we're gonna give something that grows and keeps on giving. Strategic gifting means pairing money with a simple system so your kids, your grandkids learn how to use, repay, and grow money. Growing money is fun, and you're there to coach them. So we're gonna show you how to give while you're living, and we're gonna set some light touch house rules and use our manageable floor and meaningful ceiling so generosity never puts your own stability at risk.
Yeah,
And
man. I'm excited for it. I think this is perfect timing as well. The underwriting process, the whole review process takes about 4 to 6 weeks. So if we're looking at giving this gift by Christmas, our members need to start now.
that's it. Start now can be, like you said, 4 to 6 weeks. And, gratitude is the seed of generational wealth. It's thinking bigger, being abundant. And so as we head into Thanksgiving, how does gratitude translate into wealth that lasts?
Yeah, it's funny you asked that. I've been thinking a lot about gratitude lately and what I'm grateful for. And I'll tell you, it's men like you, right? It's you, it's Steve, it's Nathan, it's a couple of men in my life who have helped me see challenges a little bit more clearly, help teach me kind of peace of mind that comes with liquidity and other options. And that can be with relationships, business, my personal banking system. And that's really what our banking system here creates for other people as well, right? In their lives, it can help them have calm, clarity, choice when life throws those curveballs. So that's what I'm really grateful for.
I appreciate you sharing. And, as we head into Thanksgiving, I keep thinking, what's wrong with all these people that are already decorating for Christmas? Halloween just passed. We still got giant spiders out in someone's fence down the street. But no, just kidding. You know, um, I really appreciate receive what you said, and for me, it's the same. I'm grateful for finally feeling like I have a handle on my finances, on life, and really it's shifted into or really bled into every aspect of my life, whether it's, my boys and what I'm teaching them, my wife, my partner, my friend, as someone, my health. I see what we're teaching people as a way that it really releases stress. It releases worry about the future because all of a sudden you're building with intention. You're building a system that's going to last over time. And Christmas used to be a time where I get excited, but at the same time, to be truthful, I'd get really stressed out, man. Like, how do I give the boys something that they're going to remember? How do you make it so meaningful? And when you add this little one change in, you better get started soon. Like Jeremy said, you only got 4 to 6 weeks, but this is going to help you make gratitude practical this season.
Yeah. So let's dive into it here. So why is it that some well-meaning gifts sometimes cause problems?
Well, I mean, think about, I don't know about you, Jay Huggins, but can you even remember what you got last year or even 5 years ago? What you got under the tree or what you received or what you were given as a kid. A lot of time, you get things because you see big commercials. You think that's what your kid wants. And within a couple days, it's just laying under the tree again, or it's forgotten. And it just leads to like regret. You're like, oh man, you end up paying for that gift way, way um, after it's paid for, right? You're paying interest to somebody else. It's stressing you out. Now you're trying to find a way to provide, but you put yourself in debt. I mean, that's happened to me so many times as an adult, as a father,
Yeah. So how does infinite banking change that?
because it's simple. Because now we're not just handing out the dollars without teaching our kids how to use them.
Ah, there we go. The gift that keeps on giving.
Yeah, that gift that keeps on giving. It is the education behind it. It's the method, right? That family bank fixes that. You're pairing the dollar with a few simple rules and you're checking in. It's
Yeah, one of the other things that I like about it is not only a gift that keeps on giving, but it's also something that's not putting you in debt, right? We talk about the opportunity cost sometimes, and some folks and families out there trying to give their children everything that they want for Christmas might go into debt. And like to your point, be paying interest on that for 1, 2, 3 months after Christmas season.
and for anyone having kids in the car right now, maybe put their earmuffs on because one of the things you want to believe in magic. And even our 22-year-old, if he doesn't believe that Santa's going to come, well, Santa's not going to come, Jeremy. So you got to still believe in that magic, but at the same time, I think it has to be manageable, right? When you're writing down everything and you get that letter from Santa and you're like, wow, I want to give my kid everything on that list. But then when you start thinking about, well, what's really going to be meaningful for them? And also, how do we make it effective long term for the family?
Yeah, I really like that effective long term for the family because again, this is the time in the season that we do think about our families. We think about gathering around for Thanksgiving. We think about the holiday meals. We think about the gift giving to our immediate family or extended family. And I like the focus here on what we could be considered a family banking strategy.
And talk about, I mean, we got some questions, right, for our listeners to kind of reflect. And if you're not driving, write these down. Write these down for yourself. Reflect later if you're not able to do it right now. But Jeremy, could you got to go through some of the questions we put together earlier for the folks?
Yeah. So we think about what we typically spend per child every, Christmas season or so. If you were to give your child, let's say 100, 200, maybe even $2,000 today, what would they do with that in the next week? Or how about this one? Do your family members know how to repay themselves and keep that wealth growing in perpetuity? Or
Mm.
what small first use would you teach most right now? The first thing that you'd want to teach them, is that going to be helping them with certification? Is it buying a car? Is it starting up their own small business? A couple of these self-reflection tools, is it just the Tonka trucks or is there something better and more meaningful that you could give them?
And I love that. So, and let's keep it simple and make it hands-on, right? So we're we're giving, I mean, kind of take your line, we're giving while you're living. We're going to coach people in real time. We get to coach our families. Again, my boys, like I was talking to Diego about his policy that we're getting ready to put in place and what we're going to be able to do with it over time. And that legacy, when you start guiding them in real time, it's how parents or grandparents are listening can start now, not later.
Mm-hmm.
And like, how are they going to do that? Like, how do we get someone to really understand that it's about getting started and not perfection?
Oh yeah, well, just start small, right? That's probably the simple answer. If you just start small, fund a child policy or a policy on your grandchild, sit with them, right? Explain what the goal is of this. Use one small, meaningful loan to perhaps fund their education. Again, start that business, maybe pay for a car, build the habit of borrowing it, using the capital, and then more importantly, proper repayment, right? We want to be good stewards of money. So the borrow, use, and repay cycle, and then those children are going to see the compounding the responsibility in action.
That's it. That's it. I love that. And just another thought for anyone who's already practicing banking when you're getting ready for the holidays, maybe you're putting a chunk of your money aside each year, like you're saving in your system, and you're picking a certain amount that you're going to spend on the family. And that's, on the immediate family, the gifts are going to be under the tree. And then on the family, as you're going, if you're like me, you're going from one town to the next, and you're eating like three Christmas dinners, right? So, but have kind of a number is what I'm thinking, Jeremy, on what it looks like for each each gift that you're giving. And that way you're able to have the money growing and compounding over time. You're taking a loan or putting on a card, buying the gifts, repaying the loan. And for the listeners, we'll give them some questions to kind of reflect on that lead in that I'm giving them.
Yeah, it's like what would be a milestone 6 or 12 months now that could help them fund this the smart way? That'd be a good one.
Another one would be like, what would who's going to do that 15-minute monthly check-in with me to make sure that we're keeping us on track, right?
Hmm. Yeah, those money meetings, like for instance, you and Patty have one every Monday, right?
Almost
Is it
Tuesday.
Tuesday?
Tuesday, yeah.
Tuesday?
Yep, Tuesday.
Yeah.
Unless there's a dentist appointment like this week, then we're gonna have it Wednesday. So,
But something like this, when you're trying to teach your children, even something as small as 15 minutes a month, just set that time aside, look at the policy, see how it grew, talk about the repayment schedule. This is an opportunity to not just create generational wealth, but also be a teaching policy as well.
and it's pretty exciting. I know when you go in and you start looking at the cash value and you realize that it actually grows daily. Now, not all carriers are the same, so they don't all report it daily, but you can pretty much go in with all the carriers and look and see the growth month over month over month. I know Connor's been in his policy since we put in the additional PUAs, and he's like, Dad, I need this thing to grow faster, for the stuff he wants. And I'm like, it's okay, buddy, but you see it growing. It always is going and getting better and better. Wait till you're my age. It'll be ridiculous.
And you see that. You see it illustrated over time. Compounding over time is an incredible mechanism.
And it's and I brought that up because we all want everything. We want more now, right? We want everything. We want our cake. We want to eat it right now. But when you're looking at this, it is that aspect of over time.
Hmm.
Over time. Start now because over time, this thing will do things that you can't even imagine.
Yeah. So if we're kind of deciding this might be a good idea for me and my family, what are a couple good family rules for these sort of gifts?
Ooh, let's keep them simple. Let's keep them simple. So, you know, first this is for education, whether purpose only, not splurges. Not these oh my goodness, what is the thing Connor's always talking about Roblox? It's not like, oh, let's give him a ton of Roblox so it'll be popular for a month. Let's think about ways that he can learn, and then we're gonna write it down. We're gonna have the amount, the rate, the start date, the repayment plan all on one page, or maybe it's just a note on your phone. Just some way that you know that you're tracking it, and then you're going to set up the automatic repayment. You're going to set it, you're going to forget it. You're going to have a plan to pay back your system.
Hmm.
And like you were mentioning earlier, we're going to have that monthly check-in. It could be a weekly check-in, just to kind of look and see, hey, are we on track with paying everything back, refilling our liquidity fund to use it again for next season, or are we off track because something else came up?
Yeah. Let's hit a little bit. We've said it a few times. Why is it important to repay your policy loans?
Multiple reasons. One, because you're only guaranteed one thing in life, Jeremy. What is that?
Change.
Yes. High five, brother. You got it. It's only taken, 4 or 5 months, but we got this down. uh, but they're like, you want the liquidity fund to be proactive in your life. So, and not only for that reason, when you're paying it back, you're actually paying, since it's simple interest, you're actually increasing the margin on whatever it is that you use it for. You're paying less to the insurance company, who, by the way, is your partner. So when they're profitable, don't get all worried that you're paying them some interest. But when they're profitable, guess what? We get what, Jeremy?
We get dividends.
We get dividends. When they're profitable, we get a share of it because we are actually partners and it's a win-win scenario. But I think what you're looking for is that as you're paying it back, you're building up, you're being proactive for the next time you're going to gift, the next time you're going to need it for business, the next time you're going to need it for whatever it is in your life for that change moment.
Yeah, and let's be like very clear here. The gift isn't the policy, right? It's the control, it's the liquidity, it's the guarantees. It's that long-term legacy value that you're building inside of the policy. Truly is the gift that keeps on giving.
And it is. And if for some reason you're no longer here, and I didn't want to bring that up in this holiday edition, but if you're no longer here, guess what? The big old tax-free death benefit, right? Keeping it out of probate is coming to your family to take care of them even more. And so, I kind of alluded to it a little bit earlier, but how do we you know, how do we manage this without risking the stability during the holidays, right?
Hmm.
How do we kind of cover it and set these systems up so we're not making people feel more stress? It's actually something that's more manageable.
Well, we started off by saying just start small, right? And we have the manageable floor and a meaningful ceiling. We've hit on this on prior episodes, but the floor, right? What is it? Typically, that can be your peace of mind, right? That could be several months of expenses. It can be you're going to build that vault, that cash value vault that's over time. How do you figure out what that is? Well, I would first start looking at your finances. Where are you splurging on a regular basis, and where can you reallocate those funds into a purpose-built family banking system? That would be where I'd start as my manageable floor. Another way that I do it, if I'm using like rules of thumb,
Hmm.
I'll take someone's age and I'll round it up to the next nearest decade, and that will be the amount in hundreds per month. So here's a practical example. Let's say that Connor's 11, right? Is he 11?
Yep, he's 11. You got it.
Bam, nailed it. All right. So I will take Connor at 11. I'll round that up to age 20. That is $200 a month. That's what I'd be putting into his system.
Huh, that's
And
a
now
new
you,
one. That's an interesting one. I like that. Um, how did you come up with that number? Just curious, just because I have not used that one before, so we might as well talk about it.
Yeah, it's a rule of thumb that I use to allow because I want to make sure that there's enough cash value to actually be meaningful. We talk about a manageable floor, but I also want it to be a meaningful policy. And I want that cash value to build over time. So with him, I'll just round up to the next nearest decade. It's $200 per month. That's going to be what? Mental math, $2,400 a year. I think about what he's going to be able to do with that cash value at the end of the year. And then you start compounding that over time. If you start young enough, as we've seen with a lot of young children, you can buy a car. You can fund portions of people's education. It's enough capital to really jumpstart the rest of their life.
I don't know about everyone else, but listeners, I heard Porsches in education, but I'm pretty sure he said portions of education or education. Just being fun with you, Huggins. So, it,
Yeah, it's my southern accent.
yeah, I like to reverse engineer these things. So when I'm looking at it, I'm saying, okay, depending on the child's age, like what kind of car are we buying them when they're 16 or if they're in Jersey 17? What do you think college will look like then? Or maybe they're going to trade school. And you start setting it up for those milestone moments. But at the same time, let's use it for fun. Let's use it for gifting. Like that's why we're here today is we're saying, okay, well, if you're the one that's in charge of the system, and now you got this policy that just helps them get what they want. And then now you have the system to replenish it each year for when the holidays come up again.
Yeah. Even if you have your own policy, like you could literally have a policy for gifting, not just, I use mine for investments. Other people use it as an emergency savings vehicle, but you could have a policy just for you, the adult, for gifting purposes. And rather than going into credit card debt every year, you know that you're going to fund your policy and then you're going to pay for Christmas gifts via your policy. That way you're not racking up mountains of credit card debt come the holiday season.
And if you're really smart here, Jeremy, you would use the system that's set up to take advantage of you and this system. And what I mean by that, it might not be a lot, but it's fun when you win the game. Is it not fun winning?
Oh yeah, I love winning. I'm pretty competitive.
Yeah, I'm a little bit competitive myself. Diego beat me in bowling yesterday for the first time in his life, I think. So
How'd you take it?
I wanted to play again. But like think of it this way, like if you have that number set for gifting for the season, okay? And you have it in the policy, and now you have a card that gives you rewards. Maybe it's even better rewards for getting gifts or something of that nature, right? For purchases. So maybe you're getting 3% on the card, you have the money setting there in the policy, but now you put everything on the card, you get all the gifts, and guess what? You pay off the card immediately with the loan and you start replenishing the loan. You like that,
Mm.
Huggins? Now you're
Uh,
winning on both sides.
yeah. Have your cake and eat it too. I like that.
Have your cake, and that's what we're looking for. We want control, guarantees, and I like cake. So
Yeah. And right now it's pie season for me. I'm all about the pecan pie. I'll start switching into cakes next month.
I like cookies. Cookies are my kryptonite. So it's going to be rough, man. I've not been getting up and doing the workouts. Kind of, anyhow. I don't want to get off
No,
track
no,
here.
you're prepping for Santa. I know what you're doing.
Oof, yeah, that's starting to look like that. I'm getting more pokes to the belly than usual lately, so that's definitely it. So, And then we talked about the meaningful ceiling just a little bit, right? We were talking about being more manageable.
Mhm.
And manageable means that we know life happens. We know that change happens. So when we're looking at it, we're going to build it so you know no matter what, you're going to keep this alive for your whole life. There's not a question. But the
Mhm.
meaningful ceiling is for what, Jeremy? Why do we even talk about that?
Oh, the ceiling part of it? Well, I mean, the ceiling really, you can't go above it without taxing everything. And I don't want to get into the insurance jargon and this and that. That's why people come to us to make sure that we're compliant at the end of the day. We just want to make sure that the banking system that you have is not just within your means, but it truly accomplishes your long-term vision. And we help you determine that ceiling and maintain tax compliance.
Yeah. What I was thinking, and I love that answer. So it's a very technical, practical answer. What I was thinking is we start with gratitude. We started with believing what's possible, thinking abundantly. And so I like the meaningful ceilings, just thinking, hey, if you can get this thing filled up to the max every year, your system becomes more and more profitable. It becomes more abundant. It works better. It's more efficient. And guess what? The gifts get better every year under the gift if you want,
Mhm.
right? So if someone's listening right now and wants to do this before Christmas, what's the simplest way to start?
Yeah, yeah. So we're basically putting together a holiday action plan. Is that what you're asking?
That's what I'm asking. Like, if you're
All
sitting
right.
this and thinking, "Oh crap, you know what? I did see my kids' holiday gift. I think I gotta get on this." I know, right? We got Black Friday coming up pretty quick. So, what do people need to start with?
Well, I'd just start with really booking a call with one of the two of us to start building your family vault, to start building your family banking system. So, step one, book the call, and then we'll help you determine that manageable floor and that meaningful ceiling. And then after that, we'll put you through the review process. Again, it's 4 to 6 weeks, and at the end of that, you'll end up funding your family banking system, and we kind of make it official at that point. We're still going to be with you. We still put out content. If you have questions on how to take policy loans, how to use it to teach your kids financial IQ, the best gift that you could give for generational wealth, contact us. That's what we're here for.
And then, at the end of all of that, you're gonna be ready. You're gonna be ready to feel differently during the holidays,
Mm.
especially as the leader, the father of your family. If you're listening, moms too. But you guys are going to feel more control, especially if mom and dad are talking to each other and feel just a little less pressure coming into the holidays and knowing that your family is protected, your family is taken care of. And this is a system that you're giving yourself while you're gifting to the family.
Oh, I like that. Say that again.
This is a system that you're giving yourself while you're gifting to the family.
I like that. So for this holiday season, don't just give what you've earned. I want you to start thinking about how you can give your family that peace of mind. When the gifts are being unwrapped and the decorations starting to come down, a lot of those presents they're going to be forgotten, oftentimes by Easter. But with this family banking system, and it's going to be continue working quietly in the background, growing, you can use it for teaching, creating opportunities long after the holidays are gone. When the wrapping paper fades and the gifts, this is just really the gift that keeps on giving, isn't it? It's the one that gives that security, that confidence, that peace of mind for generations to come. And that's truly the kind of gift that you want to give your family each and every year because it keeps on giving, even when you're not around to.
That's it. And when you're, again, what I love, what I just heard, guess what? Easter eggs where I grew up had stuff and gifts inside of them, Jeremy. So if you're repaying your loans, guess what? It keeps giving for all of the seasons, all of the different holidays. So, if you're listening and you're thinking, I got to get this started, book a call with us. Go to wealthwisebanking.com, book a call with Jeremy or myself, and let's get you started. Let's start building that family gifting system for the future. Even if you don't have one yet, when's a better time than right meow, right?
Yeah, Christmas lights are already out at Home Depot. So they started in October. It's going to come up sooner rather than later.
It's coming up sooner than later, and we want to be proactive with life. And you guys already know you're already in banking.
You're just not the banker yet.
Be blessed this holiday season. We always appreciate your time, your attention, and it's a gift to us. Take action, get started, and we'll see you in the next one.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, We're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.